Hey everybody, what's up? All right, today I want to talk about how we build a position and ride a long-term macroeconomic trend or a trend that is being driven by certain policy initiatives. Okay, that's the way I basically do my analysis. I look at policy. I've said this before. It's the people at the top who have their hands on the buttons and the levers. They fashion policy. We're talking basically about the government, the leaders in government. It could be a Congress or a parliament or a president or whatever. A monetary authority like a central bank. They craft policy. It has an effect. That's price setting. It sets everything in motion. All right. A lot of you, and I've seen this in comments, I see it in emails that I get from people. You're very quick to exit the market. You're very quick to take a profit. So you forsake, and by the way, let's be honest, the big money, big money, and I've been doing this for a long time, the big money in trading or investing is riding that big macro trend and riding it as far as you can possibly ride it. When you get in and you get out, you jump in and you jump out, it might look like you're smart for a short period of time. I mean, I had a guy here yesterday saying, boy, I'm so glad I sold my gold. He said that yesterday, which meant he sold it on Tuesday. It didn't look like such a good move yesterday, but today, suddenly that guy looks very smart. But I guarantee you, and I could go back and give you examples going all the way back. Let's use gold again. I can give you examples of people who have commented here or sent me emails or mocked me in one form or another, or even people who follow me and subscribe who are questioning and saying, Mike, don't you think we should have sold the gold at 1250, at 1220? Don't you think we should have sold it at 1320? I mean, the whole entire time since I flipped on my gold outlook and the whole entire inflation impulse theme that I said was going to happen in December 2015 when the Fed changed course on monetary policy, I have basically been in that position and have been building on that position for the entire time. The people who say, hey, I just sold out and I make a profit, that is, first of all, an example of mental weakness, all right? It shows that you are there for either the action or the instant gratification. It also shows that you are driven by fear. And the fear that you feel is the fear that you might give back some profit. And that you allow that fear to control your behavior in the market. And once you allow that emotion to control your behavior in the market, you have ceded your results over to the market, which is basically like a random thing, all right? And that's bad. That kind of behavior assures that in the long term, you will not be a winner as a trader. You might think you're a winner, and the guy who sold out the other day and gold is down $20, I'm sure today he's patting himself on the back saying, I'm such a smart dude, but you're not. Because the behavior that caused that was based on fear, based on lack of mental toughness, based on a lack of faith in your own abilities. All right, now I might be wrong. Listen, I might be completely wrong on my analysis of the inflation impulse and what is going to happen over time, but I have 100% confidence, faith in my abilities. So even if I'm wrong, and it has happened many times in the past, I know that I could work my way out of that situation. So I never allow fear to dictate how I am going to behave in the market. And those of you who sell out, and I guarantee you, and we see the same thing with the Treasury market, which I said here several weeks ago. Remember, we were talking about technical analysis, and I talked about the line, the trend line, and people are all, that's the end of the rise in interest rates because the line They're thinking like there's some line on a piece of paper, and everybody draws different lines, but that line dictates the rate of interest in the United States of America. I mean, when you think about it like that, which in reality, that is the argument they are making. I don't know if they understand that or not, but they're saying that some guy in a room somewhere, and all of you who use that, and you draw that line, that is the setter of interest rate. Because it did not go through that line, it will never go through that line. And I said, it's going to go through the line. With absolute certainty, I am telling you it's going to go through the line. And how do I know that? Because the monopolist, the Fed, is going to push it through the line. They're basically telling you in a different fashion, we're going to push it through the line. So, first of all, you have these beliefs in nonsensical things, which is fine. I mean, I said a million times I could make money throwing darts at a dartboard, but the difference between me and many of you is that I have total control over my emotions when it comes to trading. And many of you, you don't, but you mistakenly believe that behavior like selling out in a major macroeconomic trend that has a long way to go and taking a small, quick profit, and maybe it wasn't even a small profit for that guy. Who knows? That guy might have been long the gold market from $1,000 and he got out yesterday or on Tuesday. It's still wrong, but he's patting himself on the back. And when you congratulate yourself, or when you I guess score yourself as having done something great, right, and praise yourself for the wrong behavior, it reinforces that wrong behavior. All right, just like I say all the time, don't beat yourself up for behaving in the correct fashion, all right? Or even for making a mistake, don't beat yourself up. What you need to do is understand the mistake and work on not having that happen again. So what I do in these situations when I'm riding a big macro trend based on my analysis, the analysis being policy, when there are corrections, I don't fear the loss of that profit, all right, like many of you do. You want to jump out because it's like, I have a profit. Now, the way you envision it is you are giving back the profit and you get scared, you get frightened, and you don't want that to happen. So you're allowing the market to dictate your behavior. See, I don't do that. And it's the way you frame it in your mind. When I see that correction, and I've by the way, not too long ago, I told you that from December, I took my Forex account and I tripled it going into, I guess it was February. In March, it went way down to less than, it was still almost a doubling, but a little bit less. So I gave back quite a bit. I never once panicked. I never once doubted myself. I never once became concerned that I was giving back that profit. What I did on that pullback was add to my short dollar positions, okay? What I'm saying was the dollar rallied in March. I added, and now right back up again, tripling, and I'm going to continue to do that. So where many of you look at that and you become fearful, I look at that and I become opportunistic. I say, yes, this is another opportunity that the market is handing to me. I don't even think, it doesn't even enter my mind about the profit drawdown. That is irrelevant to me. I look at the fact that the pullback or the market correction has given me another opportunity to add on to that position. And as long as my analysis says, if the policy remains in effect, and I have come to the conclusion that that policy will create a certain outcome, there is no reason for me to change what I am doing until that policy changes. And this really also goes to the understanding of economics. It goes to the understanding of MMT. Everyone else, when you don't have a grasp of really what is going on, when you're looking at a line can't tell you anything. When you're looking at news items that are bombarding you and you allow yourself to get scared and frightened out of a position, and maybe you get out at a good moment and you pat yourself on the back and you're congratulating yourself and you're praising yourself for the wrong thing, you are reinforcing the wrong behavior. And in order to combat this, and I've said this in the past as a mental game exercise, you want to put yourself in a position to feel that anxiety and to feel that worry, and you want to fight against that. You want to work on suppressing that. You want to work on reframing the way you see what is going on in your own mind. You want to see that as opportunity as opposed to something that is harmful to you, something that's going to take away what you have worked hard for. No, you want to see that as bounty, as abundance, as the market giving you more. Remember, I did a video not too long ago. I said that if the market was a living thing, if it was a person, its sole job would be to fool you, to deceive you. And it's very good at that. Why? Because you allow yourself to be fooled and deceived. You talk it into yourself. A lot of times I've spoken about language. I have people all the time emailing me with words. It's in the tank. I'm getting crushed. I'm getting killed. Right? All these things. Those are things you program into your head. Those are things you program into your head. So, when you identify a big trend, you never think, when it starts to move against you, that is something harmful or bad. You think about that as opportunity. You use that to add to your position. And until the conditions that were created as a result, or I should say until that policy changes, the policy having created those conditions, you stay with it. These things could last for years, all right? They could last for years. We have elections every 2 years at a minimum. Those are congressional elections. One is coming up this November. We have presidential elections every 4 years. I mean, these things could last for years. Okay, you get Fed policy every month. They don't raise rates one month, then cut them the next month, then raise them back. No. They raise and raise and raise and raise and raise. They cut and cut. And by the way, when they do things like that, it reinforces the very conditions sometimes that they're fighting against. But it perpetuates those conditions. All right? So, you can't pat yourself on the back for jumping out. Okay, I could have shown examples of this going back all the way to gold at 1,050, at 1,100, 1,140. I had a guy recently this year when we had a pullback, another pullback in gold to 1,280, and I said to buy, and it went to 1,240. He sent me a nasty email saying, how could you tell somebody to buy at 1,280 and then it goes to 1,240? Well, it was at 1,370 yesterday. What do you want from me? Did I ever get another email saying, hey, I was wrong about that? Thanks for helping me stick with it. No, I never did, but that's okay. I don't ask for that. All right, everybody. Bye-bye.